Hello friends, just revisiting what you're looking at on the screen. We are plotting these levels on daily basis for crude oil, for ES, wheat, and BTC. For ES, we are doing more levels for same thing for crude oil as well. So on the daily print, you will see these two flat vertical lines. These are the levels, market maker levels to go long above this top level and below this blue line short. So these are what we print as long above this, short below this. This area itself is not tradable, should not be traded, and this is used for your contract collection by big players. That's what this one is. On the right side, we have what is called the Keltner channel, which are volatility bands, and it is placed on Renko charts. We are using 19-point Renko charts. There is a numerical association for that, and the length is 36. ATRs are 3.69. So the system, what we are saying is we are tracking the very large swings, which will be tested in coming days or a week. This is where the big moves will start. Like here, we had printed out from this association that this is market is going to go here and reverse, and it went here one time, second time it really dumped big time, right? 120 points is $12 S&P, also 120 point ES. You can hedge it and take the bias on one side. You can create 1 to 2, 1 to 3, one-on-one ratios, hedge trading. That is more of a tactical thing. So once we are in this level, we look to the right side and say, are we in the right context of the Keltner channel? If you are the top level and the oscillator of interest is also on the top side, we are looking for a short, right? So we have confluence of three things which came together. And what happens also with all this technical analysis tool, this happens. It takes off, right? Same thing. So you just cannot assume that once you're on the top, it's going to go short right away. If you're on the bottom right here, the band is going to go short right away. This is where you have to also look into your measured move. We talked about that measured move last time. This just gives you an additional context. So measured move is all you need actually to make your decision. That have you reached the point of reversion? So for example, right here, if you look at right here, these green levels or fat green levels are kept fat for a reason. 70% of the time, these market makers will go here and reverse. So I have two levels here for a reason. I think this is off topic, but you can see it came to, these are printed at the close of the market automatically. Came to the green level, to the tick, went up, to the tick, came down. Right, and it came very close, did not do anything, it came to the green level, right? These are just giving some suggestive areas. Then it go up here to the tick, to the green level, came down, right? And then this is, there are two levels of green printed, as I said. So what, one thing is 70% of the time they will reverse from these green areas. They come very close and they reverse. They come very close or touch it very, so now I'm just getting a context. This is my balance point, market maker, where I suggest to myself that, hey, if I'm going short, I will stop loss here and I want market to pull me in on the short side. I will not trade inside this. So this is my stop loss. This is my buy entry, limit buy entry, and for the short side, there we go. Sell, limit sell, right? Same thing here. If I'm going to go long, it has matched my target. It came to my target. I'm going long. It is close to my green level. Green level touched here from the previous day to the tick. Now what? Right? Now I need a level to get into. Either we go straight right here, as we discussed, since this is a level from the previous levels, or we wait for next sprint to happen. When the next sprint happens, we go long above this, and stop loss is here. We go short up below this and stop loss on the top side. So now if you look at the context on the right side of the Keltner channel, it will help you which direction might be better to go. Because once you are saying long above this 4072 or short below 4066, now if you can qualify which direction you want to take, you may also eliminate some losses in the direction. You will pick the big move. That is what this is designed to do. This is going to help you in that context. So now if you look at the, as we discussed earlier, right? If this is your measured move, a reflection of that is here. So yeah, I'm already expecting market to turn. It is also at my market maker levels already printed out for that day, right? From the previous levels. And now we have a better context. Say we are out of the volatility bands for a while. It's going to snap back. It's a mean reverting market. Snap back to the VWAP, multi-day VWAP. This is 100 moving, 200 moving average of the VWAP, right? So I'm driving this market maker measured moves on this chart to slow down and see where the big swings are coming, right? I'm interested in this big swing here, big swing down, right? I'm not interested in this pennies, 10, 20 cents profit, because the Kelly criteria tells you that in long term it is an impossible feat to win that way. Mental stress and whatnot, right? Okay. So you got that. So right here, there are multiple measure moves going on. I just showed you one. So you can measure the small, mini measure moves and big measure moves. So all these impulses will help you. Impulse here, right? Impulse here. So let's say impulse, if you started measuring this impulse, okay, it came down. And what is the next impulse? Which is right here, right? At our level. So we are already retesting. This came down, retested the same level. Measure move is also happening. So to keep that going. Same thing is the next measure move. So second measure move happened here based on this impulse. Look at the oscillator. Look at the location of the Keltner channel. Look at the printed projected level. All came together, right? So that is what we are suggesting, how these levels play out. Hopefully it could be consumable at your trading desk. So these yellow ones are, I think, little multi-day targets, reversals. So when I'm going to print this today, these are the levels which are showing up, right? So I will say below this fat line, above this long, below this short. Now you have to qualify this. Now what is Keltner telling me right now? And what is my measure move telling me right now? So let's look at this measure move. So where is the measure move impulse? Impulses are going down, right? So the big impulse move happened from here to here. Is our impulsive move? Who is telling us? So if you're measuring it from here to here, look at the reversal. We are at the reversal point. If I just, you got the idea, right? This height, I'm just moving it to the right side, keeping the top context right. From the way high up, we are at the low of the impulse move. Right here it happened, but below the Keltner channel, then you have some kind of oscillator going on. That this is a Friday night. Not have much juice there going on, but you got the idea. Now on the short side, if you take this impulse and take this impulse, right? It's not going to be perfect to the take, but you got the idea, getting the ideas. This is a long, this all happened during the news session. Okay, that's fine. How about this guy? It happened right here. See that? It picked up nicely. I'm pretty sure there were some levels here at that day. Or it came pretty close, I think. Yeah, it came pretty close. This was, it came off by 3-4 points. But you got the idea. Options is usable, right? Now if you take this impulse here, now this impulse is already finished and is basing here. Now what can happen? It can go double the impulse too, right? Now we're gonna trace this on the moving average as discussed. So we are at this point where reversal is possible. If reversal fails, you think about this way. We're going down to at this level, which will bring us to this red master level, which is the frequency of 9 ultimate box, which I already printed out a while back. 3969, somewhere like this. 90 something is coming out here, right? All right, so this is where I think, watch it and consume it. And if your DPs come at these levels, you have a DPs will come at this level only. You will not find any DP showing up outside these levels because these are levels used by big banks, right? So, all right. So this is where I think you understand big fat line, blue lines above and below, above the top line, short below the bottom line. You can be using this as a reversal or as a target or as initiating a new trade. And these ones also market will go and test these levels and then reverse from there. If it want to rally, they'll go to rally. Now this is the next rally point, and this is the previous one also are rally points. This is if market is weak, they may just pull it here in this area 4111 green level also there somewhere here and then crash it, right? So we're dealing with probabilities when we are about to make the trade at our designated areas. So for me right now, I'm gonna make a decision at a little larger swings, which is now if you see this blue lines, right? This is double. There are two blue lines here. So there's a high probability they will try to run for this, right? So I'm looking for the recent last 5 days of levels. So keep at least the last 5 days of levels. Crude oil, same thing, right? We took a shot here in the top. We had a yellow box printed here. Waited. We took 90% profit. Same thing here, measure moves. Now, this is above this long, right? Market came here, moved long. This is $1, $1,000 profit. Came down again, above this long. So this is what above long arrows are going to be. Above this arrow, stay long. And if you're starting a trade, you go long here. Stop loss is here. One tick maybe below this. So it will try to come in, try to push you out. If it does, that's fine. You get enter again, right? So let it, the way I do it, let it come in, and I'll put a buy stop and stop loss here. If it get in, it gets in. You will get chopped fund sometimes. If you do the same thing here, let it come in. It came in. Stop loss is here. Let it come in, and once it is inside it, and if you're going to go long, here, if you look at the oscillator here, right? It is saying potentially long. I let it do a buy stop. It will go inside, pick me in, stop loss is triggered, then it's management of trade. Same thing here on this day. Came here, I want to go short. Now if I took this short, it's middle of the night. No, this is after the close, sorry. And then stop loss was here. I got pulled in. And was I wanting to go short or long? At this point, oscillator. Now I have to use measured moves also on the right side. You got the idea what I'm getting at. So I'm already looking to go short here at this point. I'm waiting for this day's ending. This was sprint trade right away. I'll take a short here. If I miss this one, I'll just wait for it to come extremely close and take a short, right? And there we go. $2,500. Same thing here. Now this one, if you saw this, the guy probably took us out one time. That's fine. Take a small stop loss. This is where we don't know how the bar was created first. When it went up first and then came down, it came down first and then went up, right? So this is the only reason you will get some stops run. That's it. And second time again, it came down here. Boom. Third time, it run very fast. You put a buy stop here, stop loss here, boom. So that is more of a tactical trading trend. Now this multi-day VWAP does a very good job on crude oil and wheat to defining the trends. Here also you can put again same thing, measure moves, right? So bigger measure moves, small impulsive measure moves. So right here is a big measure move. If I move it here, what is the reflection of the big measure move from the last impulse? Right here. And you get what? Reversal. At what level? Green level. It may be not the current green level, so maybe that's why you have to look at the last 2-3 days. Look at this green level to the tick here, right? I suggest you keep these levels for last 5 days, just like way they are drawn here. They will be revisited at least. At the same time, you have this level. See this box? It came into that box. Market maker moves happens for a reason, and they know exactly what they're doing, except in the news days, right? Why did it stop here? Look on the left side. See this? Goes to the level. Why did it stop here? Look on the left side, right? Now these levels are printed before the market even opens at the market close. I need some bars to print, right? So there we go. Now you see the context, what is going on. What I am giving you is a bigger levels, where the risk is the smallest for longer swings. This level was here on the top, which I took. I said, I'm waiting for this guy to come down here, but I am doing a swing trading. So on these contracts, I hope this helps and we will go from there. Thank you so much for listening and happy trading.